Welcome to the Daily Recap. A man who once reportedly discussed interest rates with Donald Trump in secret walked into the United States Senate today and had to answer for it under oath. So here is the question we are asking right now. Is the Federal Reserve about to become a political tool? And did Kevin Warsh already cut a deal to make that happen? On July 22nd, 2025, Kevin Warsh sat before the Senate Banking Committee for his confirmation hearing to become the next chair of the Federal Reserve. Trump nominated him to replace Jerome Powell, and today was the moment Congress got to ask the hard questions. And they did not hold back. Warsh spent hours being grilled on everything from his connections to Jeffrey Epstein. Yes, that Jeffrey Epstein. To whether he used fake social media accounts, what senators called sock puppets, to promote himself and shape public perception. That came from Senator Elizabeth Warren, who questioned whether Warsh or people working on his behalf had been running coordinated online influence campaigns. On the Epstein question, Warsh acknowledged a past connection but denied any wrongdoing and said his relationship with Epstein had no bearing on his qualifications to lead the Fed. The biggest moment, though, came when senators pressed Warsh directly on whether he made a deal with Trump to cut interest rates in exchange for the nomination. Trump has been loudly and publicly demanding lower rates for months, attacking Powell repeatedly for not doing it. Warsh denied making any such deal. He said he would not commit to any rate path and that monetary policy decisions would be made based on data and economic conditions, not political pressure. He did, however, back what he called a policy regime change at the Fed, suggesting the central bank needs structural reform and a new direction. He stopped short of specifics, but the phrase alone set off alarms for a lot of economists watching the hearing. Let's talk about why this hearing matters to you personally, because it absolutely does. The Federal Reserve sets interest rates. Interest rates determine how much you pay on your mortgage, your car loan, your credit card, your student debt. When rates go up, borrowing gets more expensive. When rates go down, borrowing gets cheaper. Right now, rates are elevated. A lot of Americans are feeling that every single month. Trump wants rates cut. He has made that clear. If Warsh gets confirmed and follows through on what Trump wants, rates could drop. That sounds good on the surface, right? Cheaper loans, more spending, easier to buy a house. But here is the problem. If inflation is still running hot and you cut rates anyway because a president pressured you into it, you risk making inflation worse. And we all lived through what bad inflation felt like just a couple of years ago. Groceries, rent, gas, all of it. The Fed is supposed to be independent. That independence is the entire point. It exists so that politicians cannot manipulate the economy for short-term political wins at the expense of long-term stability. The moment the Fed chair becomes someone who owes the president a favor, that independence is gone. Maybe not on paper, but in practice. That is what the sock puppet allegations make worse. If Warsh or people close to him were running online campaigns to build his reputation and lobby for his nomination, that raises serious questions about his character and about how he would handle outside pressure in the most powerful, unelected financial job in the country. The Epstein connection, even if ultimately benign, adds another layer of scrutiny that is hard to shake in 2025, given how politically charged that name remains. People on fixed incomes, first-time home buyers, small business owners, anyone carrying debt, all of them have a direct stake in whether the next Fed chair operates independently or answers to the Oval Office. Here is how we got here. Jerome Powell was appointed by Trump in 2018 and reappointed by Biden in 2022. For the last several years, Trump has been furious with Powell for not cutting rates faster. He called Powell an enemy, said he was doing a terrible job, and floated the idea of firing him, which most legal experts said he could not do. Kevin Warsh is not a stranger to the Fed. He served as a governor on the Federal Reserve Board from 2006 to 2011. He was seen as a hawk, meaning he tended to favor higher rates to control inflation. He has been a fellow at the Hoover Institution and runs in elite financial circles. He was reportedly a frontrunner for Fed chair when Trump won in 2016, but Powell got the nod instead. Fast forward to 2025. Trump is back in office. Powell's term as chair runs through May 2026, and Trump reportedly began floating Warsh as a successor earlier this year. Reports emerged that Trump and Warsh had conversations, including discussions that touched on monetary policy direction before any formal nomination. That is what prompted the deal question at today's hearing. The Fed regime change language also has context. There is a growing movement among certain economists and conservative policy circles to restructure how the Fed operates, possibly revisiting its dual mandate of maximum employment and stable prices, and giving Congress more oversight. Warsh has been adjacent to those conversations, which makes his phrase today land with a lot of weight. So what happens from here? The Senate Banking Committee will review the testimony and vote on whether to advance Warsh's nomination to the full Senate. Given the current makeup of the Senate, Republicans have a majority, and unless there are defections or the Epstein or sock puppet allegations gain serious traction, Warsh is likely to advance. But the confirmation is not a sure thing. A handful of moderate Republicans breaking ranks could complicate the math. And if new information surfaces about the social media campaigns or deeper Epstein ties, that could shift the conversation fast. Economists and former Fed officials are watching closely. Many are warning that even the appearance of political coordination between a president and a Fed chair nominee is corrosive to the institutional trust that makes monetary policy work in the first place. Powell's term does not end until 2026, so Warsh would not actually take over immediately, even if confirmed. That creates an unusual dual-track situation with real potential for conflict. Markets are already pricing in some of this uncertainty. Watch the dollar and bond yields in the coming days for signals on how Wall Street is reading the room. Here is the bottom line. Kevin Warsh denied a deal, backed reform, and survived a very uncomfortable day in the Senate. But the questions raised today about independence, integrity, and influence do not disappear after one hearing. The Fed chair shapes the financial lives of every American. Who holds that job and why they hold it matters enormously. We will keep tracking this. If you found this useful, like the video, subscribe to the Daily Recap and hit the bell so you never miss an update. See you tomorrow.